In recent years, Dollar General and consumer discretionary stocks as a whole have struggled due to inflation and higher interest rates impacting their customer base. However, if interest rates continue to decrease and inflation cools, it could lead to a recovery in the stock's performance. On top of that, the company has been pushing its back to basics strategy, focusing on changes at the store level such as reducing inventory and updating stores with a refreshed look. At the corporate level, Dollar General laid off around 60 employees at its headquarters in Tennessee due to a restructuring plan, according to the Tennessean. This follows a weaker performance during the final week of December and lower expectations for the full fiscal year of 2024. Though these layoffs are not as deep as when Dollar General overhauled its corporate sector in 2015 by slashing 255 positions. Then, while Dollar General recognized National Private Brands Month, it highlighted its digital coupons and Value Valley as additional savings opportunities for customers. The company offers over 3,200 consumable private brand products, with Clover Valley being the largest brand by sales. The plan is to add around 100 new private brand products in Q1 2025, including various food items. The company states it aims to provide quality products at everyday low prices and continues to serve shoppers by offering approximately 2,000 items at $1 or less through its Value Valley section in-store. Dollar General, or DG for short, is the largest discount retailer in the U.S. by number of stores, having well over 20,000 stores located in 48 U.S. states and Mexico, with a high concentration in southern, southwestern, midwestern, and eastern regions. They offer various merchandise such as consumables, seasonal items, home products, and apparel, including national brands and their own private label options at discounted prices. The company was founded by J.L. Turner in 1939 and evolved through different names and ownership structures before becoming publicly traded again on the New York Stock Exchange under the symbol DG in November 2009. With this long-standing history coupled with DG's business model that has led to profitable growth over the years, bullish supporters are optimistic of a rebound later in 2025. As the company likes to reiterate, their business model focuses on providing everyday low prices on quality merchandise, conveniently located stores, and a time-saving shopping experience. They offer nationally advertised brands and private label options at competitive prices while maintaining a limited number of items per category for strong purchasing power. Their convenient store locations and easy shopping format cater to customers' needs in rural, suburban, and urban communities, offering a variety of products including packaged food, cleaning supplies, health and beauty care items, and more. DG is confident in substantial long-term growth potential in the U.S. because of opportunities they see to add new stores, including their pop shelf concept in existing and new markets. They plan on remodeling or converting locations within their current store base to better serve customers. The pop shelf concept offers unique small box retail opportunities focusing on seasonal items, home decor, health and beauty products, cleaning supplies, party, and entertainment goods. Looking beyond the U.S., international expansion has also been identified as a potential growth area, with particular interest in Mexico, where they opened their first stores in 2023. At its core, DG's merchandise offerings are everyday necessities and a broad range of general merchandise categories that cater to customers' basic shopping needs. Consumables, their largest merchandise category, includes paper and cleaning products, packaged food, perishables, snacks, health and beauty products, pet supplies, and tobacco products. Seasonal products include holiday items, toys, batteries, small electronics, greeting cards, stationery, gardening supplies, hardware, automotive, and home office supplies. Home products consist of kitchen supplies, cookware, small appliances, storage containers, frames, candles, craft supplies, and kitchen, bed, and bath soft goods. Apparel includes basic clothing for all age groups along with socks, underwear, disposable diapers, shoes, and accessories. Seasonal and home products categories typically have higher gross profit margins, while the consumables category has a lower gross profit margin. This plays into DG's model for store layouts and staffing, with a store manager, assistant store managers, and sales associates. The stores typically have a low-cost, no-frills building design that requires minimal capital investment and has low operating costs. With approximately 7,500 square feet of selling space on average, about 80% of their stores are located in towns with populations of 20,000 or fewer. When mentioning new store formats with larger selling spaces of around 8,500 to 9,500 square feet, the company says it's had success locating suitable store sites and believes there is ample opportunity for new store growth in existing and new markets, as well as opportunities for relocating and remodeling stores to better serve customers. Speaking of customers, Dollar General's customer base primarily consists of low and fixed income households and a wide range of shoppers who appreciate the store's value and convenience. Depending on their location and financial situation, customers may rely on Dollar General for fill-in shopping or weekly essentials. The company aims to serve these needs by strategically locating its stores and selecting merchandise. It also purchases from various suppliers, maintaining direct relationships with national brand producers, directly importing a portion of its private label products, and using distribution centers and private fleet deliveries to transport goods to its stores. These strategies will be crucial to continue counteracting broad economic factors impacting customers' spending. Factors such as high unemployment, inflation, pandemics like COVID-19, higher costs of living, changes in tax laws or government assistance programs, and trade barriers. All possible contributors to reduce customer income and discretionary spending. In addition to rising U.S. food inflation that may affect the company's ability to maintain gross margins without negatively impacting demand. The success of plans for increasing sales and profitability while improving operational efficiencies depends on factors like accurate prediction of customer demands, timely response to market trends, effective marketing, and maintaining cost effectiveness, as well as managing the challenges faced in areas like merchandising, non-consumable products, self-checkout options, and securing customer data for their DG Media Network platform. As for competition, DG competes based on pricing, customers, store locations, merchandise quality, product assortment, service offerings, sourcing, supply chain capacity, in-stock consistency, customer service, shopping experience, promotional activity, employees, and market share. To maintain a competitive position, the company might need to lower prices temporarily or permanently, which may result in reduced profitability due to lower margins. And since competition is expected to keep reducing store locations, expanding delivery services, and utilizing digital technologies for a more convenient shopping experience, DG will need to be responsive to competitive pressures, industry changes, and customer preferences. E-commerce and delivery options are certainly changing the shopping experience. However, physical locations still play an important role in the industry and for DG. That's why growth and profitability can still heavily be affected by how timely and cost-effectively they execute real estate projects and address challenges posed by expansion. Factors affecting the successful opening and remodeling of stores include suitable store locations, capital funding, supply chain volatility, negotiations for acceptable lease and development terms, hiring qualified personnel, and general economic conditions. The company also acknowledges that they may not be able to anticipate or address challenges effectively when expanding into new markets due to different regulatory environments, competition, consumer preferences, higher cost of entry, and operating costs. With these considerations in mind, it's still possible for DG to recover from recent struggles, provided macroeconomic factors like inflation begin to subside, while they also address changing consumer and market patterns, as well as continuing to execute core strategies from their business model. For more on Dollar General and other companies, follow Ascencore. Thanks for watching and have a nice day.